We should not be ideological about this, we should be pragmatic. It is possible to both tax extraordinary profits fairly and incentivize investment.
I'm worried about China and the current policy. I think it's unsustainable because the virus only becomes more infectious. So I think what was amazing management of a virus in 2020 is turning a liability now, and the only way out is having high-efficacy vaccines.
Under President Xi, the ruling Chinese Communist Party has become more repressive at home and more aggressive abroad.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Taking aim at China, U.S. Secretary of State Antony Blinken vows to influence Beijing, saying its regime is the most serious challenge to the international order. Tech turnaround, Alibaba and Baidu jump after a beat on earnings, giving Asian stocks a much-needed boost. Plus, staging a comeback, signs of robust consumer spending give markets a risk-on mood, with U.S. stocks poised for their first week in the green in 2 months. Now, first thing is first, so let's talk about the green, and let's talk about, of course, some of the buoyancy that we've seen on the markets overall. So let's start with the European map, and then maybe we'll go on to what we're seeing for treasuries and dollar that are pretty much stable. You can see there's a bit of a difference. Now, it's not a huge rally, but we are seeing spots of green with the CAC 40 gaining 0.3%, similar gain for the DAX, and then a bit of pressure, for example, on the UK. This is mainly to do with energy, oil, of course, retracing some of their gains, and then the FTSE MIB in Italy also down 0.3%. Now, overall, European stocks are rising. I don't know if we can get the dollar and treasuries. There you go. Technology, of course, a lot of focus on technology after we had some pretty encouraging news out of China tech, and that's also partly why we're seeing a bit of a boost to these European stocks. Always look at the dollar. We have the Bloomberg US Dollar Index, 1,227. If you look at consumer retail sales, they're really what's driving a lot of these European stocks. And then the dollar extending a bit of a slide. Treasury yields pretty much steady. Bitcoin, always a good idea to look at Bitcoin, 28,904. Now, as well as the war in Ukraine and subsequent global food crises, another challenge that overshadowed the World Economic Forum in Davos this year was the inflation spike that's sucking money out of workers' pockets, leaving less for spending on what companies are making. Well, here's what some attendees had to say about it.
Inflation is no doubt trending higher, and it's way higher than our inflation rates throughout the year.
As far as the cost is concerned, we have a kind of a perfect storm.
We are going to have more conflict. We're going to have more inflation. Inflation causes domestic political conflict.
Raising interest rates is not going to solve the problem of inflation. It's not going to create more food. It's going to make it more difficult because you aren't going to be able to make the investment.
The critical thing for us is not to see kind of second round effects happening, not to see too much broadening of the things that are increasing in prices, and very importantly, as you mentioned, to make sure that the medium-term inflation expectations remain anchored.
Well, we're now joined by Rebecca Chesworth, a senior equity strategist at State Street. Rebecca, thank you for joining us. Inflation, how much of a problem is this for equity valuations going forward?
Remains a big problem still. So on some days we're thinking it's all over, we're peaking. But if you think about it, even those annual rates may start to peak from now. Those monthly, month-on-month figures are going to carry on for some time still. So it's still a big thing that we need to think about when we're allocating to equities.
So what do you look at, like earnings to choose who has, I guess, the ability to pass on these prices, or how do you differentiate among sectors?
So what we look at, I mean, there's a lot of work that goes on what's happened in the past. Yeah. So you look at inflation sensitivity, you know that areas such as oil and gas companies or materials companies like miners have always been able to pass this on. They've always worked in the past. But you also need to think about, what about where we're in now? And you have to start to balance inflation with other factors. So slowing economic growth, volatility. So I think in this environment, you start to get to an area where you need to barbell a lot of your strategies.
Are you still invested in China?
China's much more difficult. I was hoping you weren't going to ask me about China, because China is really difficult for the long term. China's where it's at, as we know. But I mean, at the moment, with the COVID zero policy, it's still a very difficult situation. And one would prefer to be in some of the areas which are a bit more remote from China as directly in there.
So where do you see that opportunity? We had, Citigroup saying, for example, they're cutting their conviction on U.S. equities because a recession could be around the corner.
Well, I think what you have to do is you have to think about where are those stocks, where are those sectors which can carry on growing but are a little bit more defensive. And I tell you, one of the areas we've seen a lot of interest is somewhere like healthcare. So areas that have that discretionary demand, that grow year in, year out, a little less volatile and aren't reliant on some of those hot growth markets we've had in the past.
So it's sector by sector almost, or is there a favourite Rebecca chart that you actually look at every day to know where you want to be invested in?
Well, I mean, if you get me on sectors, you won't stop me, I'm afraid, because I think there is always a good sector to play. But at the moment, in this environment where you've got quite a fragile environment, where the news flow changes, you need to pick your part of the market. Yeah. And if you can pick something like energy that works with inflation, you pick something like healthcare, which is your more defensive, I think you start to feel a little bit more comfortable if you do that.
But energy, I mean, you could have huge dislocations because of the transition. So is it like the old energy? Is it renewables? And, there are components also that we really need rare earths to make both work.
Yeah, I think actually this is the first time in many, many years you can play both. Okay. You can play traditional energy and renewables. Of course, there's a lot of news flow this morning, and there was yesterday in the UK on the windfall tax, but I don't think that's the end of the story. I think this significant move to energy security and transition carries on for many years.
Is there anything to do with tech? I mean, I feel like the whole market really swings depending on what tech does, either in the US or China.
So tech's more difficult. Tech has been difficult for the last year. I think tech remains maybe difficult while interest rates are still in ascendancy. But for the long term, and again, it depends on your investment horizon, for the long term, tech's interesting. But stick to that tech, which is the hardware, the software, not necessarily some of those social media names.
All right, Rebecca, thank you so much. Rebecca Chesworth, their senior equities strategist at State Street, stays with us, and we'll talk a lot more about some of the sectors that she likes and doesn't like. Coming up, the UK's Chancellor of the Exchequer, Rishi Sunak, announces a £15 billion support package to combat the country's cost of living crisis. We'll look at the details next. And coming up a little bit later, we also speak exclusively with the UK Prime Minister Boris Johnson. That's a conversation on taxes, windfall, green energy, also Partygate. Don't miss that interview. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Alice Atkins. Hi, Alice.
Hi, Francine. The US has rejected a plan by Russian President Vladimir Putin to facilitate grain and fertilizer exports only if sanctions on his country are lifted. The Biden administration has pinned the blame on the Kremlin for blocking shipments and stoking concerns of global food shortages. Putin didn't specify if he was referring to Russian exports or those from Ukraine that have been stopped by Moscow's blockade of ports. Sources say the US and Taiwan are ready to announce talks that would deepen economic ties, a move that is likely to be seen as a fresh challenge to Beijing. Bloomberg understands negotiations would focus on economic cooperation and securing supply chains. The agreement would be similar to the Indo-Pacific Economic Framework. It would fall short of a free trade agreement. Beijing's month-long COVID outbreak is worsening, with 29 new cases recorded for Thursday. There's growing anxiety within China's government about the impact of its COVID-0 policy on the economy. Officials have imposed a raft of restrictions, including work-from-home orders for most Beijing districts. Profits at Chinese industrial firms shrank last month for the first time in 2 years. COVID outbreaks and lockdown disrupted factory production, logistics and sales. Data from the National Bureau of Statistics showed industrial profits fell 8.5% in April from a year earlier. Senate Democrats said they were a bit more optimistic about a compromise with Republicans on gun control legislation in the wake of the Texas school massacre. Democrats appear to be willing to accept incremental steps. Many senators are going home for a 10-day recess and will meet with voters who may pressure them to take action. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine?
Alice, thanks so much. Alice Atkins there with your first word news. Now, the UK government has unveiled a £15 billion aid package to combat the country's cost of living crisis. That includes a windfall tax on energy companies as Britain's face soaring energy bills. Well, let's see how today's newspapers have been covering the story. The Financial Times has the headline, Sunak's windfall tax U-turn sparks anger from energy groups. Metro leading with Rishi to the rescue at last. The Daily Telegraph reads, Tories are now the party of big spending, says Sunak, and the Mirror has a headline, about time, Rishi. I love the British press. Joining us now is Bloomberg's UK economy reporter, Lizzie Burden. Lizzie, I mean, this is a hugely significant support, of course, for Britons, but also a turning point for the government.
It is. What's important about it is it's targeted. It's targeted at the poorest households, unlike previous packages, and it's targeted at the fourth quarter when energy bills are set to rise. So it's a boon for consumers. They're expected to spend this money, which means it's a boon for the UK economy, which should now avoid a recession. But it piles on the risk of inflation. Rishi Sunak says this morning it's not going to add more than a percentage point, but let's not forget this is a 40-year high inflation print we had last time. And so the Bank of England is now expected by Bloomberg Economics not to pause tightening in the second half, but to hike rates 4 times before the end of the year.
Yeah, and actually, our Valerie put together some wonderful charts looking at inflation in the UK. And, you know, what Bloomberg Economics is saying is that not only are we dealing with the kind of tight labor market that we're seeing in the US, but also the energy price inflation that we're seeing in Europe. So it's a nightmare for the Bank of England to deal with this. Okay, talk to me about the windfall tax. So BP said, look, if this happens, we're not going to do more investments.
Exactly. It's controversial not just with the energy bosses, though. It's also difficult for the Conservative Party ideologically, because, first of all, this was a proposal by the Labour Party, so the Conservatives have stolen Labour's clothes and gone further. Now the tax burden in the UK is the highest since the 1950s. This is the first windfall tax since Tony Blair was in number 10. And then you've also got a higher tax on business and a doubled investment allowance. So you've got some of Johnson's own MPs saying, hold on a minute, this simply isn't Conservative to tell businesses how to invest. Never mind the fact that it's, against the net zero pledges. So ideologically, a minefield for the Conservative Party.
A minefield, absolutely. Lizzie, thanks so much. Lizzie Burden there with the very latest on the UK and this windfall tax. Now, coming up later this hour, we also speak with the UK Prime Minister Boris Johnson, so don't miss that interview on Bloomberg TV. We'll have plenty more, of course. We'll ask him about the windfall tax. We'll ask him about energy crisis, the cost of living, and I'm sure he'll get a question or two about Partygate as well. Now, we're back with Rebecca Chesworth, Senior Equity Strategist at State Street. Rebecca, this is, without a doubt, the chart of the day. So let me bring up the various components when it comes to inflation here in the UK, and the fact that if you look at the labour market data for March, look, this is tough. This is an extremely tough environment for the Bank of England to deal with. Is this like the test case of what other G7 central banks could do?
It certainly is. It certainly seems like we're running ahead, as you said. And it's interesting because you think towards the start of last week, we thought maybe the Bank of England were going to rein back those rate rises a bit because we were starting to get, we had some poor retail sales figures, we were worried about PMIs, etc. And then, as Lizzie said, you get this windfall tax or this profit levy, whatever we're going to call it, and we start to worry about inflation again. So, as you say, we are the hot topic now. Everyone is going to watch how we handle it in this country.
So what do you deal with UK equities? Is there anything that looks attractive at the moment?
Well, it's interesting because the UK has actually performed very well this year. And actually, as a whole, you could say, do remember that the stock market is not the economy. Yep. And the stock market is relatively cheap in the UK. The sectors are the right sectors, so they're either sectors that can deal quite well with inflation or are relatively defensive. And of course, we're a bit further removed from the Russian oil and gas situation than Europe. So if we think as a whole, we can think that UK investors will probably stay there and may add in some money. But again, it's like our earlier conversation. I think you need to be aware of the inflation, but also be defensive. So maybe you do that twin strategy again.
So is it all going to play out in the next earnings season? And how do you, it's about margin, it's about market share, and I guess it's about currency swings.
Yeah, there's a lot for us to watch. And what we're seeing is quite complicated because the earnings season we've just seen is almost too early to tell how any of this happens. So yes, we watched Q3, we watched the comments on margins, we watched the guidance, and I think it's all a lot could change before we get to the end of the year in the UK.
Rebecca, how much do you spend actually thinking about currency? So this could be the most volatile space from now until the end of the year. Yeah. And again, if we have a dollar rally, this could reprice a lot of sectors that are very either commodity rich or linked to the dollar.
Well, I think you're right. I think because people's mind have been off currency for most of this year because it was just a one-way bet, and that was the dollar strength. Now we've seen, 10, 11 days of the dollar coming back. So I think that starts to re-enter equations again. And I must admit, when I look at the flows that we see as an ETF provider, we start to see people coming back into the market, but considering their currency exposure. Right. So maybe you go to the S&P 500, but maybe you do that with a hedged fund. So I think that becomes a much bigger part of the equation.
Anything with crypto? I mean, if you have a haven, what's the haven actually against inflation right now?
So the haven remains, as I said, I mean, oil and gas is the topic of the season, but you've also got commodities which still remain a play for investors. Or you go the other way and you say, let's just go to something, a defensive area that isn't hit by it. I'm not sure crypto's the answer. I think we... I'd love to say so, but I'm not quite sure that's our answer for now, because even though we saw that strength in the markets yesterday, we're seeing an OK day today. I'm not quite sure we're out of the woods for a lot of these recession worries.
Healthcare. So healthcare is everything from biotech to vaccine makers. How do you choose the right ones?
So you look at the growth areas, because we're in a market where vaccines and treatments for COVID stole the limelight. But actually, there are companies out there doing amazing things, looking for cancer treatments, looking for Alzheimer treatments. I mean, the companies that really get that right will be the ones to watch.
Rebecca, thank you so much. Rebecca Chesworth, our senior equity strategist at State Street, joining us today. Now, coming up, the U.S. Secretary of State does not hold back in his criticism of China's president. He's accusing Xi Jinping of oppression at home and aggression abroad. So we have more on that story next. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's turn to China, where data continues to paint a grim picture of an economy paralyzed by COVID outbreaks and strict lockdowns. Profits at Chinese industrial firms shrank in April as a result of disrupted factory production, transport, logistics, and sales. Well, for more, Arinda Curran, Chief Asia Economics Correspondent, joins us now. And first of all, how bad is the data, and what does it actually say about China's economy?
It's clearly bad. It does show the pressure on the industrial sector, Francine. Like you mentioned, factory profits down 8.5%. And interestingly, foreign companies operating in there, their profits are off, were off even more, around 16% actually over the start of this year. So it does speak to what's happening with the industrial sector, which is essentially a lot of disruption to manufacturing and production, a lot of disruption to logistics and transportation. And all of that is because of the ongoing either COVID lockdowns or at least the aggressive measures required to contain the virus. China has been trying to operate something of a closed loop or bubble system for its factories to keep them in operation, but clearly that hasn't been enough to kind of smooth out the overall disruption. And I don't think anyone sees a near-term complete turnaround for the factories just yet.
Yeah, so U.S. Secretary of State Antony Blinken and also taking aim at China. Let's have a listen.
Power to reinforce and revitalize the laws, the agreements, the principles, the institutions that enabled its success so that other countries can benefit from them too. Beijing is undermining them. Under President Xi, the ruling Chinese Communist Party has become more repressive at home and more aggressive abroad.
And some pretty strong language from Blinken. Will it backfire?
Well, very blunt language, no doubt about it, Francine. Very direct. Certainly sums up where China-US relations are right now, not just on the economic front, but across the board. But at the same time, though, there wasn't any particular new policy proposal in it. It didn't break too much new ground other than the ongoing tensions between both superpowers. Analysts out here were seizing on this idea of decoupling between China and the rest of the world, but the rest of the world becoming more dependent on China. That's been kind of taken away, something of a new line on where the debate might head. Secretary of State Blinken did also say there's some areas for cooperation between China and the US. That's like on climate change in North Korea and other areas. But overall, I would say it's a very hawkish statement. Doesn't break new ground per se, but certainly sums up where relations are at between the US and China. And clearly they're in a pretty poor place at the moment.
And we also had some rare contradictory statements between President Xi and Premier Li, and it's causing confusion amongst public officials. What exactly happened?
Well, yeah, so what's going on is obviously from the top down, China's enforcing COVID zero, and we all know that's a very aggressive measure to control the virus. The big lockdown in Shanghai, for example, that's having a huge economic impact. And on the other side, you have economic officials coming out saying, listen, we need to do more to support the economy. You know, you need to get your stimulus measures underway and put a floor under growth. So analysts are kind of looking at this and asking, my goodness, these policies are going in opposite directions. How can you have COVID zero while you're also trying to stimulate the economy? The two work against each other. And that's why there's a feeling that there must be some kind of you know, at least a parting of ways between Premier Li and President Xi. At the same time, though, there's another view, and that view is that Premier Li is enabling COVID zero. He's the one who's been sent out to shore up the economy and allow it to happen.
Great, thanks so much, Randa Curran there on China. This is Bloomberg. Taking aim at China, U.S. Secretary of State Antony Blinken vows to influence Beijing, saying its regime is the most serious challenge to international order. Tech turnaround, Alibaba and Baidu jump after a beat on earnings, giving Asian stocks a much-needed boost. Plus, staging a comeback, signs of robust consumer spending give markets a risk-on mood, with U.S. stocks poised for their first week in the green in 2 months. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to Sir Howard Davies. He makes us smarter on the economy, but also on all things geopolitics. He's the chairman of NatWest, and he sees the UK Treasury facing huge challenges from current Conservative Party policy on Brexit. Now, in his new book, The Chancellors, the former Deputy Governor of the Bank of England looks back at how the UK economy has been managed over the past 30 years. Well, Sir Howard Davies joins us now. So thank you so much. And it's actually so topical because of the windfall tax and the fact that we're also seeing the Conservatives now going to territory that in the previous was really left with the Labour Party. Why did you write the book?
Well, it was a lockdown project, to be completely frank. But actually, 20 years ago, I wrote a book called The Chancellor's Tales, where I asked a lot of the previous chancellors, dating way back to Dennis Healey, to come and talk to the LSE, where I was at the time, about their experience managing the Treasury. And I did that up to 1997, because that was, you know, Gordon Brown was still around as Chancellor. So I thought, well, I'll do 97 onwards. And of course, that was a big change because the Bank of England became independent in 1997. Treasury lost monetary policy. And so I thought that was a natural break point. And I've interviewed all the chancellors and the permanent secretaries to try to understand how the Treasury has operated since then. My subtitle actually was, what did the Treasury think it was doing? But people, which could be read in two different ways.
Yeah, I was going to say, is it positive or negative?
Well, that's right. You know, but I have tried to allow the Treasury to speak for itself to a large extent and explain how they saw their interventions in the economy during that period.
I love that you have, you know, superheroes actually writing books in lockdown. I mean, I just barely survived lockdown, and there you are, like, publishing a book. What is the one thing that international viewers need to understand about what's different from UK chancellors? I mean, compared to other countries in Europe, they enjoy a lot more power.
Yeah, they typically, in Europe, the division of responsibilities, there's a Ministry of Finance, and there's also a Minister of Economy, and sometimes other bits too. But in the UK, we have a centre of power, which is very powerful because the Treasury does the spending and the taxing, but also does this sort of economic management. And that's a relatively unusual model. Now, I thought, when I started writing the book, I honestly thought that probably where I would come out at the end was we should go for a more European model. But I've come out the opposite way, because if you look at the various attempts that have been made to divide the Treasury up, it's always come from number 10 Downing Street. Because,
to weaken it?
Yes, to weaken it, because they don't like the fact that there's a rival centre of power. And in our elective dictatorship that we have in this country, I've eventually concluded that actually two rival centres of power makes an awful lot of sense. And if you did divide up the Treasury, number 10 will become too powerful.
Sir Howard, what does history teach us about what the Chancellor should be focusing on now? I mean, this is a Chancellor that is, of course, conservative, but putting on policies that feel like Labour.
Yeah. Well, the single biggest problem in the UK economy is productivity. It's very weak and has been weak for some time. And probably the single biggest factor behind that is investment. Investment is very weak. It has been particularly weak since the Brexit referendum. So I think the Chancellor has to focus on business investment, what can be done to stimulate that. And that probably does mean a fairly significant overhaul of our tax system, which is less favourable to business investment than is typically the case in Europe.
But this is extremely delicate, especially when we're dealing with Brexit and we have this small open economy that's, you know, dealing with very high inflation, and it's almost a template for the rest of the G7 countries.
Yeah, well, we, of course, as we often are, we're somewhere in between the US and Europe, and we have some dimensions of the pathology of each of them, actually. Yeah. So we've had very low interest rates on the sort of European model, but we've now got inflation somewhat higher on the US model. So we're kind of betwixt and between. I mean, that will be, however, I do think a temporary phenomenon. I mean, it may last a bit longer than the Bank of England thinks, but I think it will eventually, you know, these energy price rises will drop out of the equation and we'll have annual inflation rates somewhat lower. But I think you have to see through that and look at the underlying problems, and that's one of the messages.
But it's so hard to see through it when so many people are seeing these rising cost of living crisis and actually, you know, they have to choose between eating and heating.
Yeah, but the Chancellor has done a lot on that today, and it's an unusually redistributive package for a Conservative Chancellor. If you look at what's happened to the income deciles, I mean, this has been focused on the people at the bottom, which I think is absolutely right. Now, you may say, why did the Chancellor take such a long time to get to this point? It's a fair question, but nonetheless, I think having what he's done now should take off some of that pressure and has focused assistance on the place where it's really needed.
But is a windfall tax a good idea?
Well, personally, I'm instinctively against windfall taxes because, you know, they're very difficult to define the circumstances in which you have them, and then everybody else looks and says, whoops, if I make a decent profit, I'm going to have it taxed away. But I guess in these circumstances, given that it is a highly unusual, you know, sort of intervention driven by a war, you probably can define it tightly enough such that other companies won't fear that he's coming for them. And so I think it's probably just about okay.
Sir Howard, I mean, one thing that I actually, you know, I was wondering when I was reading your book is how close do the banks work with Treasury in trying to give them data so that they understand what they're dealing with? So a lot of economists have gotten wrong, you know, the inflation, productivity, even employment. You have access to this data because you have real clients in the real world.
Yeah, I mean, I think our interaction is more, however, with the Bank of England and the prudential regulators who have access to everything that they want. So generally, we feed through that way. I mean, the Treasury does talk to the banks from time to time about how they are feeling things. But I mean, I think typically, and now that the Bank of England with the Prudential Regulatory Authority has an oversight of everybody, there's not much they don't know. I don't think they can hide behind the excuse that we didn't know what was going on.
All right, Sir Howard, thanks so much. Sir Howard Davies, Chairman of NatWest, stays with us. We'll talk a lot more about the book, and we'll, of course, talk about productivity. Coming up a little bit later this morning, we also speak with the UK Prime Minister Boris Johnson. That's a conversation on the windfall tax. It'll be a conversation, of course, on inflation, but also Partygate. So that's coming up shortly. Now let's get straight to the Bloomberg First Word News. Here's Alice Atkins. Hi, Alice.
Hi, Francine. The US has rejected a plan by Russian President Vladimir Putin to facilitate grain and fertilizer exports only if sanctions on his country are lifted. The Biden administration has pinned the blame on the Kremlin for blocking shipments and stoking concerns of global food shortages. Putin didn't specify if he was referring to Russian exports or those from Ukraine that have been stopped by Moscow's blockade of ports. Sources say the US and Taiwan are ready to announce talks that would deepen economic ties, a move that is likely to be seen as a fresh challenge to Beijing. Bloomberg understands negotiations would focus on economic cooperation and securing supply chains. The agreement would be similar to the Indo-Pacific Economic Framework. It would fall short of a free trade agreement. Beijing's month-long COVID outbreak is worsening, with 29 new cases recorded for Thursday. There's growing anxiety within China's government about the impact of its COVID-0 policy on the economy. Officials have imposed a raft of restrictions, including work-from-home orders for most Beijing districts. Profits at Chinese industrial firms shrank last month for the first time in 2 years. COVID outbreaks and lockdowns disrupted factory production, logistics and sales. Data from the National Bureau of Statistics showed industrial profits fell 8.5% in April from a year earlier. Senate Democrats said they were a bit more optimistic about a compromise with Republicans on gun control legislation in the wake of the Texas school massacre. Democrats appear to be willing to accept incremental steps. Many senators are going home for a 10-day recess and will meet with voters who may pressure them to take action. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Alice, thank you so much. Alice Atkins there with the very latest first word. Now, coming up, place your bets. How a new derivatives market is letting investors bet big on almost anything. We'll have the details on today's big take story. That's a little bit later on in the show. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now we're back with Sir Howard Davies, chairman of NatWest, who also just published this book, The Chancellors. How was a book party? I mean, at least people are back, so you don't have to do everything by Zoom.
Yeah, no, it was great. I think people were quite happy to turn up at a party, actually. I had it in the London Library in St James's Square, which I chair. And it was good fun. And you had a sense of people going, phew, you know, we're back to normal. Yes, that's right.
So, Howard, talk to me about Europe. So you have actually the ins and outs, which is basically goes through what happened with Brexit, the involvement of Treasury. 2022, where are we?
Well, it's not a great situation, I think. If you look at the economic trends, you can see a break in the 2016 when the referendum happened. Investment has been weak since then, and indeed trade has been weak, both imports and exports, although in fact imports have probably gone better in some ways. And I think that's a tricky thing, because over time an economy that's less open to trade is likely to be less competitive and less productive. Most economists think that there will be a Brexit hit of about 4% to GDP. I mean, there are a few at the margins who don't think that, but the average is that. And I think that's what we are seeing working through. And of course, gradually, and of course, it's been hidden by COVID and now by inflation and the war. But, you know, underlying all these ups and downs, there is a generally lower and weaker growth trend. And that's the priority the government must have.
Are there trades, agreements that can be put in place fairly quickly? I think that the UK signed the first trade deal with US state Indiana. It's small, but could we have these kind of agreements in place?
Well, that looks a bit difficult, because politically the Northern Ireland Protocol trouble is creating a problem in the US, so the US don't seem to be prioritising a free trade agreement with the UK. So I think that's quite hard work, but it has sort of disappeared out of the public view temporarily. I mean, for reasons we kind of understand. But I think that's the kind of thing that needs to come back quickly onto the agenda, because otherwise, we're just not going to compensate for this drag anchor which we've got on the economy of Brexit.
How many bankers have left the UK because of Brexit?
The figures seem to suggest it's about 7,000, maybe growing. But you can't be totally reassured by that. It's less than people thought originally, because there is regulatory pressure. The ECB have been doing an exercise looking at all of the European banks and their trading operations in London and saying, are we happy with that from a risk management point of view, or are you doing back-to-back trades in Europe, which we don't like? And they've gone around, I think, 56 trading entities and are putting a bit of pressure on them to readjust the balance. So I think over time we will see some more. It hasn't been a great exodus, but...
I was in Davos and I was speaking, this will make you laugh, I spoke to a lot of chief executives in the banking space, and they were like, are you still in London? I said, yes. And they were like, it's a nightmare getting my people out of London because they just don't want to leave London.
Yes.
Will the City of London survive because of this? Because it's just attractive.
It is. I mean, people, the schools and the Opera House and, all kinds of things. Which makes a difference. And it has been harder to move. And, of course, COVID also perhaps stemmed that tide to some degree because that was even harder to move during the COVID period. But undoubtedly, there's a lot of inertia. But, you have to say that a financial centre doesn't have a guaranteed right to remain the financial centre. If that were true, Babylon would still be the world's financial centre. And, it's not. So, I do think you can't be complacent about it.
Yes.
And there are regulatory pressures. And, unfortunately, there's a regulatory memorandum of understanding agreed with the Treasury and our regulators and with the EC, which has been negotiated but hasn't been signed because the Northern Ireland Protocol makes the politics of that difficult. And that's the kind of thing that I think really needs to come back on the agenda.
So will that also hurt clearinghouses?
It could do. Well, the clearinghouse problem is quite acute because the European Commission have said they will extend equivalence to the London clearinghouse until, I think it's the middle of 24, and they will not extend it beyond that, so that people will have to move. Now, this is a case of an irresistible force hitting an immovable object because the European banks do not want to move because they say that'll reduce liquidity, that'll increase costs, etc. And at the moment, it looks as if nothing happens. And if we hit this deadline, then probably a lot of business will move to New York.
But will it fragment? This is good for no one.
That's good to nobody. It's good for New York, probably, because New York, bizarrely, has equivalence, which London does not have. I just can't help thinking that if we could get over the Northern Ireland Protocol, that and some proper political discussions could be had, that there is a solution to this. But at the moment, I can't see what it is.
What was the favourite bit, actually, in your book that you had to write? Is there something that surprised you?
Well, I quite enjoyed writing about the Scottish referendum, which has sort of faded into history a bit. But the Treasury then was extremely influential in explaining that the Scots had to make a decision about the currency and that they couldn't assume they could just carry on with the pound whilst having their own separate fiscal policy because of the sort of free rider problem which was revealed in the Eurozone. And I think actually looking back at that and seeing those arguments, which were quite forward-looking in a way, I found quite an interesting...
I wonder whether, in the research of this book, we often, always really give politicians a hard time for not thinking about the citizens, but some of these decisions are quite stressful.
They are stressful. It's a tough job. If you look at the people, Alistair Darling inherited the financial crisis and, was dealt a hand with the top card was an 8. He had no money. And that was very, 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 very tough. Gordon probably had it easier. Osborne, there was a recovery sort of underway when he took over, so that wasn't too bad. But Stephen Hammond had to negotiate Brexit and post-Brexit and disputes within the cabinet. It's a tough job.
It is a tough job. Thank you so much, Sir Howard Davies, there, Chairman of NatWest, with a great book, very good-looking cover, and it's a great read, so I urge everyone to go and check it out. Now let's get straight to your Bloomberg Business Flash. Here's Alice Atkins. Hi, Alice.
Hi, Francine. Broadcom has agreed to buy cloud computing company VMware for about $61 billion. The move makes the chip maker a bigger force in software in one of the largest technology deals of all time. The transaction represents about a 44% premium to VMware's valuation before May the 20th. That was the last day of trading before Bloomberg reported a potential takeover. Workers at Apple parts supplier Kuaita Computer in Shanghai have clashed with guards. That's according to people familiar with the matter. Media reports over the last week have highlighted frustration among the workers who have been trapped in a bubble due to mounting COVID infections. Kuaita and Apple representatives declined to comment. A South Korean business newspaper reports that Samsung has notified parts supplier of a 10% cut in its smartphone production for this year. Citing an unidentified official at one of the suppliers, the paper says Samsung plans to produce 280 million units, down from an initial target of 310 million. It's blaming weak demand due to rising inflation and the ongoing war in Ukraine. Alibaba's shares surged in Hong Kong after revenue rose 9%, beating estimates. The result reassured investors trying to come to grips with the economic cost of China's strict lockdowns. However, Alibaba refrained from offering its usual outlook for the year, underscoring the unpredictable impact on supply chains and consumer sentiments. That's your Bloomberg Business Flash. Francine?
Alice, thanks so much. Alice Atkins there. Now, coming up, place your bets, how a new derivatives market is actually letting investors bet big on almost anything. We have the details of today's big take. That's next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's focus on today's Bloomberg Big Take, and it's a story of Kalshi. Now this is a new and pretty controversial type of financial exchange for trading on the outcome of events. Now it's recently been approved by the U.S. Commodity Futures Trading Commission, and it does let investors bet big on almost anything. Well, our investigative reporter Liam Vaughan has been all across this. Liam, I mean, this is amazing. It's basically between trading and gambling. What can you tell us about this new market, Kalshi, and its founders?
Yeah, so Kalshi is this thing called a prediction market, which has been around in academia for quite a long time, but previous attempts to kind of get it up and running and get it past the regulator have always failed. And fascinatingly, these two very ambitious, very intelligent 24-year-olds at the time managed to convince the CFTC finally that this was a good thing. Their kind of pitch was that these markets, which allow you to bet on everything from like the outcome of the Oscars to whether a piece of legislation will pass to whether bees will be put on the endangered species list, you know, literally anything, are useful financial products to allow people to hedge. So, for example, if you're in a big fund and Brexit's coming down the corner, rather than having to sort of predict what that's going to do to stocks and derivatives, you can just bet on Brexit itself, and it's a kind of cleaner way to hedge. But as our story gets into, there were lots of people within the regulator that sort of felt like this was really just gambling with another name, and also could be dangerous, you know, with regards to people starting to mess with reality in order to make a lot of money.
Yeah. So, Liam, your piece says that some regulators were actually worried that trading on events could be dangerous. Is it because there's too much money involved, or because it really replicates some of the gambling concerns?
I mean, it's a bit of both. I mean, I mentioned earlier that the only previous prediction markets were run by universities, and you were only allowed to bet a few $100s. And the reason for that is because there was concerns that if you put enough money on it, the incentive really increases for people to start trying to rig it, like there is in any market. So I gave the example of like bees being put on the endangered species list. Well, if you can imagine, there's going to be somebody or some department that's responsible for making that decision. And if you've got like millions of dollars riding on it, then it's quite conceivable that somebody will try and, get to that individual, get to that group and try and rig that outcome. More kind of shocking than that is previously people have tried to kind of rig, manipulate these kind of prediction markets because they know that the press look at them. So you can almost change the narrative. So say you've got a market on like, some individual winning the next Democratic primary. Well, if you can get prediction markets to say this guy's actually like the smart money's on this guy, and you can get a load of newspapers to write about that, then you can kind of start to have an impact on the real world. Yeah. It's not just dog wagging tail, it's tail wagging dog, if you see what I mean.
Okay, yeah, great story. It's one of our most read stories, so I urge everyone to go and check it out, of course, on our social media or on the Bloomberg terminal or website. Liam Vaughan there joining us. NI Big Take is where you find it on the terminal. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York, and Edwards here in London. And this is Bloomberg.
The challenge is going to be how are you going to make this a global solution, right?
Are we going to be in a recession, or are we going to be in a rocky landing, maybe soft landing?
The inflation story, and probably I think for me more important, the job story is still something in flux.
The consumer will follow where the labor market goes.
I think we're seeing more of a spending shift in the consumer behavior
pattern shift than necessarily early signs of a recession.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, May 27th. Our top stories today. Another retailer gets hammered. Shares of Gap are plunging after the company slashed its forecast and missed earnings estimates. Taxing times for Boris Johnson. The British Prime Minister speaks to Bloomberg after hitting the energy industry with a 25% windfall profits tax. And the governor of Texas reportedly drops plans to speak to the National Rifle Association, meeting in person after that elementary school massacre. But Greg Abbott will still deliver a taped message. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kriti Gupta in New York. Kailey Leinz is off today. And back to the markets, Kriti. It does seem as if that positive sentiment in the US yesterday going through into Asia, coming through into Europe. So far this Friday, we are buying stocks.
Yeah, a little bit of green on the screen, at least in the Asian session, Anna, and really a lot of this comes from those technology stocks that you see. Alibaba, Baidu, they did come out and actually with some positive earnings stories, and it didn't just help the Chinese benchmarks, it helped the entire region. You saw, of course, the MSCI Asia Pacific Index up to the tune of 1.6%, but really, to my earlier point, the outperformer here was, of course, in the Hang Seng in China, 2.9% gains, almost 3% gains. This is significant as we talk about the investability of China, and specifically Chinese tech, just given the global route that you've seen, but specifically concentrated in those high-flying names. Do those growth stocks lose their luster a little bit? But today, at least, that's not the case, or at least in the overnight session, it certainly wasn't. I do want to get to the currency story, though, because this is important. As we talk about geopolitical tensions between the United States, between China, keep an eye on the offshore yuan here. You do see a little bit of strength, but remember, we do still have some very strong words from Secretary Blinken, also potentially some strong words from President Biden as well when it comes to Taiwan, when it comes to Taipei. Also keep an eye on the Japanese yen. Remember, we are constantly watching for that continued weakness in the yen, that continued strength story. So, of course, that's going to be a currency pair I have my eye on, Matt.
Keep your eye on it, Kriti. All right, we have, as Anna mentioned, some optimism here on this Friday that is a little bit surprising, right? We have futures up before a three-day weekend, and typically traders want to get out of long positions before such a holiday. So let's see if we rally at the open and then maintain gains throughout the day. We have 10-year yields rising. This is the second session in a row right now. 275 is the level there. They came up just a little bit at the end of the session yesterday, so it does look like investors are comfortable enough to let go of some of that government debt, the perceived safety of government debt. NYMEX crude on the rise again. Text intermediate almost to 115 now. That's a Brent level over the last couple of weeks, and of course Brent is rising as well. So very important as higher gas prices disturb Americans, especially on these long holiday weekends where they tend to drive more. Bitcoin falling down below 29,000 and holding around this $28,000 level is disturbing for some, especially Anna, the weekly run, or the run of weekly losses. I think you were telling me this morning it's 8 weeks in a row, right? And that's the longest string of weekly losses that we've ever seen in Bitcoin.
Or for a decade, I think, Matt, but certainly a weak statistic if you're looking for one in terms of Bitcoin. Not the most lost, but in terms of the length of time that we've seen weakness in that market. That is interesting. And we will talk much more about crypto coming up later in the program. We have a guest to talk to us. There's a lot going on away from Bitcoin in other coins as well. Interesting to see then. We were buying stocks in Asia. There's a little bit of positivity come back into US futures. And in aggregate, we are buying stocks here in Europe. But certainly it's a really mixed picture. We're flat on the IBEX in Spain, certainly flat in London. The CAC and the DAX make modest gains. Really strong, though, in Scandinavia. We've got a lot of buying going on of Scandinavian stocks this morning. Let's move on and show you where we are on a sector perspective. We've got some of the consumer-facing names that have been beaten up in recent sessions, some of those performing well. So consumer products is one of the sectors we're watching that's bouncing back 2.5% to the upside. A lot of Scandinavian names in that sector, it would appear. This is the UK side of things, though. This is underperformance in the UK because BP is down by 1.4%. We saw these businesses hit yesterday as well. This is as a result of that windfall tax on their UK operations, their UK profits. So that's the latest there. And BP saying that they're going to review their investment plans as a result. This has a more multi-year element to it, the tax, according to BP, than they had anticipated. And this is a big unknown. Centrica, this is another one of these power generating companies, electricity company. We talked earlier on in the week about SSE and Drax. They operate in the same space. And here there's a big question mark. Will they or won't they be hit by the same tax? And we just don't know. The Chancellor leaving that open, actually mentioning it and saying it's still a possibility. possibility. He's thinking about it. This is the ruble, and the ruble losing some ground this morning. In terms of Russian news, Chrissy, we need to keep an eye on the deadline, of course, for Russian payment of debt, or a coupon on that debt payment. And it does seem as if we're approaching another deadline at the end of today. And this, crucially, is going to be the first one since the US Treasury closed that loophole that allowed the money to get through last time. So we'll see whether the Russian money finds its way through this time. Russia says it has paid, but we'll see how the process develops from here, Chrissy.
Yeah, a really fascinating time to look at those Russian assets as we especially talk about the ruble, which I think is like the strongest that it's been last quarter cut relative to other EM currencies. Does it perhaps start to lose that steam as it is this morning, given those capital controls? We'll, of course, keep an eye on that, as well as what is ahead today at 8:30 a.m. New York time. We'll get the latest read on the U.S. consumer with personal income and spending, as well as the core PCE deflator for April. That will be followed by University of Michigan consumer sentiment at 10 o'clock. And the U.S. bond market closed early at 2 p.m. today for the Memorial Day holiday. And the National Rifle Association's annual meeting is scheduled to start in Houston on Friday, despite the mass shooting at a Texas elementary school on Tuesday. Former President Donald Trump said he will keep his appearance. Anna.
Chrissy, UK Prime Minister Boris Johnson spoke to Bloomberg this morning in a wide-ranging conversation aboard a train, because he's travelling at this point. He talked about the economy, Partygate and Ukraine.
I think it's very, very important that we do not get lulled because of the incredible heroism of the Ukrainians in pushing the Russians back from the gates of Kiev. I'm afraid that Putin, at great cost to himself and to Russian military, is continuing to chew through ground in Donbass. He's continuing to make gradual, slow, but I'm afraid palpable progress. And therefore, it is absolutely vital that we continue to support the Ukrainians militarily.
Prime Minister Boris Johnson in the UK talking about Ukraine there. He gave comments on the global geopolitical picture. Meanwhile, the UK government has unveiled a $6.3 billion aid package to combat the country's cost of living crisis. How are they going to pay for that? Well, part of it is coming from a windfall tax on energy companies as Britain's faced soaring energy bills, and energy companies have been making money. Joining us now is Bloomberg's UK economy reporter Lizzie Burden, who has details for us. So a wide-ranging conversation there with Boris Johnson. It's been a really busy week. We've gone from Partygate to the news yesterday about support for families and for individuals. How significant is this extra support then?
Very. It's big money, and it's targeted, crucially. It's targeted at the poorest households, and it's targeted at the fourth quarter when energy bills are set to rise. So this is just what the lobby groups have been calling for. Because consumers are expected to spend the money, it should help the UK to avoid a recession this year, but it does heap pressure on the Bank of England. Bloomberg Economics didn't think we were going to get more tightening in the second half of this year. Now they've changed their call. They see 4 hikes before the end of 2022. In terms of the windfall tax, it's very controversial, not just because it was originally a Labour policy, but also because energy bosses are now saying that they're going to look at their plans again for investing in the UK. But really, it makes the tax burden the highest since the 1950s. So Rishi Sunak doesn't look like the tax-cutting heir to Margaret Thatcher anymore.
No, following indeed in the footsteps of authoritarian leaders like Orban from Hungary. Lizzie, thanks very much. Lizzie Burden there talking to us about what the UK is doing. Now let's talk about retailers. Well, the Gap specifically, shares falling after the retailer lowered its full-year forecast and posted first-quarter profit that missed Wall Street's estimates, citing operational missteps and higher costs. Kailey Leinz, Bloomberg UK retail reporter, joins us for more. So what were the missteps?
Yeah, so I think really for Gap, this was a really big miss. Investors were pretty shocked. And what we should really be looking at is Old Navy. So there we're not seeing simply the fact that there's a cost of living crisis and that we're going to see shoppers buying sort of clothing less and less. It's also the fact that there was the problems with their sizing. And that's something that I think investors are finding it harder to forgive for a retailer when this environment is always very, very difficult at the moment. Also, if we look at Banana Republic, that's sort of more of a premium end of the Gap brands. And that actually fared much better in the period. So we're going to see going forwards that end of the spending is going to be doing better. But when people are looking at their staples, you know, they really expect more than the sort of poor sizing that they got from Old Navy.
Katie, thanks very much. Really interesting to see how Gap fits into the broader conversation about retail, about those other retailers that have been struggling, of course, and then yesterday some that weren't, and whether people are just spending money on services instead. Katie, thank you very much. Bloomberg's Katie Leinz joining us with the retail narrative out of the United States. Over to China. In Shanghai, it's a sign of the extreme steps being taken to keep factories running during a lockdown. Workers at an Apple supplier, Quanta Computer, have started to revolt against their overseers after being locked down in their factory for almost 2 months. Bloomberg's Tom McKenzie has details. Some quite harrowing scenes there, Tom.
Yeah, we're talking about tens of thousands of workers. This is a company, Quanta Computer, that makes the MacBook for Apple. And just for the context, these workers are part of the closed-loop system that China has implemented to ensure that manufacturing can continue amidst the COVID-0 policy. What does a closed-loop system look like? Well, it means that those workers are essentially trapped inside their factory where they live, eat and work, and they've been doing that for 2 months with no respite. And so you've seen these protests, you've seen them surging past the guards, they've been concerned about supplies of food and medicine, things like that. Over the weekend, they actually surrounded the dormitory of the Taiwanese managers of this company to urge additional pay and, again, to express their concerns about the lockdown. The longer-term picture is, the clearer and bigger implications are that so many manufacturers are relying on this closed-loop system, and now you're seeing and starting to see it fray at the edges. GM are here, Shanghai are here, Tesla is there in Shanghai. Tesla have put some of their workers in an ex-military camp and some former factories, and they're housing them there as part of this closed-loop system. You're seeing this discontent amongst workers, but also amongst households.
Closed-loop system.
Yeah.
So prison is a closed-loop system. Like, why do we use that phrase? It's so silly.
Essentially, they cannot leave these premises. They are continuing to be paid, of course. These workers about $450 a month, which is below the average pay in China. They get their food. But clearly, you're locked in for 2 months with a lot of difficulty in trying to move out and leave. And of course, those frustrations boil over. And the point is, if this system frays at the edges and then just breaks down completely, then that manufacturing is going to grind to a halt. And the likes of Apple saying they've already taken an $8 billion hit on sales. Look, the people of China, they have a phrase called eat bitterness, 吃苦. They say that they can put up with a lot of hardship. Well, that has a limit, and you're starting to see that now in China.
Absolutely. Tom, thanks so much for joining us. Tom McKenzie there on the riots that we're seeing at Apple production facilities. Now, U.S. Secretary of State Antony Blinken took aim at Chinese President Xi Jinping during a speech laying out the administration's approach toward China. He spoke yesterday.
Rather than using its power to reinforce and revitalize the laws, the agreements, the principles, the institutions that enabled its success so that other countries can benefit from them too, Beijing is undermining them. Under President Xi, the ruling Chinese Communist Party has become more repressive at home and more aggressive abroad.
Meantime, the Biden administration and Taiwan are planning to announce negotiations to increase economic ties. Beijing has warned Washington about its relationship with Taiwan. Jack Fitzpatrick, Bloomberg government reporter, joins us now from D.C. for more. And Jack, of course, this only comes a couple of days after President Biden said the U.S. would intervene militarily if China attacked Taiwan.
Yes, this is a bit of a softer approach than that after the president was forced to sort of walk back that comment on military intervention in Taiwan. But there is supposed to be a series of negotiations to try to deepen economic ties between the U.S. and Taiwan. This would not be a trade deal. It's not something that the president would have to bring to Congress, and it's not something that could guarantee market access. It's not quite that significant, but it's the kind of thing that would focus on the resilience of the supply chain, agricultural trade, that kind of thing. And it's actually along the lines of the Indo-Pacific economic framework. But of course, speaking of China, there was some hesitance of the Asian countries involved in the IPEF to include Taiwan in that. So this is almost a bit of an appendix to the IPEF that the president is working on through executive orders, not a trade deal, but in his own right, more broadly in Asia.
Jack, let's talk about another thing the president has been very vocal on. That, of course, is simply gun control and what that means in the wake of the shooting in the school in Texas on Tuesday. Today, of course, we know the National Rifle Association, the NRA, is hosting their event in Texas. And Greg Abbott, actually the governor of Texas, looking to pull out. What can you tell us about the developments on that front?
Yes, he is expected to pull out in person, but still deliver a video address. So obviously it is news. It is a response to the recent shooting that the governor is not participating in the NRA annual summit today. Maybe some pressure, seeing as he is up for re-election and was just yelled at an event by his opponent, Beto O'Rourke. So even in a state like Texas, which is has a number of gun supporters, some political pressure on him. But I wouldn't want to overstate that, seeing as they are still likely to hear from Governor Abbott. And of course, as we heard from former President Trump, he'll still be involved in the annual summit. So not a wholehearted backing away from high-profile Republicans from the NRA's annual meeting.
Jack Fitzpatrick of Bloomberg Government in Washington, thank you, as always, for the updates. Let's take a look at some of the stocks moving in the pre-market trading in the United States, because a lot is going on. Of course, we did just talk about the retail story, the Gap story, so significant as we talk about what within Gap is actually moving. And, of course, Gap shares down to the tune of 17% this coming, given that you do start to see a little bit of a slowdown. But most importantly, to me, I think the story here is the store closures. They're looking to close 50 Gap and Banana Republic stores, but open 40 Old Navy and Athleta stores. Really still pushing for that Old Navy story, but really still concerned about the margin pressures, the supply chain pressures, a theme that we've been hearing quite broadly. Let's take a look as well as Costco, also reporting earnings after the bell. They're actually kind of had good earnings, but what they are saying is those rising costs, the margin pressures, are still going to weigh into their bottom line. For our international audience, Costco, it's essentially this wholesale kind of retailer. They essentially, their business model is to buy in bulk. You get a membership, you buy in bulk, and essentially the unit price becomes cheaper. So really kind of still a broader way of looking into the retail space. Those shares nevertheless down 1.8%. Once again, this coming off of the idea of rising margin costs for Costco, which actually does make a pretty decent margin. Let's also go to the entertainment industry. Lionsgate also under pressure. A lot of bad news overnight, I gotta say. Lionsgate, well, unchanged now, but it was under pressure in the pre-market, and this really comes off of their plan to spin off their Starz Entertainment unit by the end of the summer. Investors weren't that excited about that plan, given just how much revenue Starz gives to their bottom line, but of course we're going to see whether or not that plan actually holds through the summer. Anna.
Coming up on this program then, Chrissy, we will talk to Wei Li, BlackRock Investment Institute Global Chief Investment Strategist. So much to talk to Wei Li about the fate of retail in the US and globally, about the risks involved with the Chinese supply chain at this point. Also talking about the higher tax take that we are going to see some corporates facing. And on the crypto front, we'll talk to Marieke Flamant, who's the CEO of Near Foundation, a Swiss blockchain project, plus the gambler's market. Today's big take story examines the newly approved startup that allows 5-figure wagers on everything from the Grammys to the next COVID wave. Read more by typing NI Big Take into your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kriti Gupta. Today here in New York, Kailey Leinz is off. Anna Edwards still with us, thankfully, out of London. We were talking, Anna and I, about the long losing streak that we've seen in Bitcoin. We've seen a similar losing streak for equities. 7 down weeks in a row for the Dow Jones Industrial Average, the S&P, and the NASDAQ. Well, we're seeing gains now for all 3 of those benchmark indexes. So maybe this is the end of that losing streak. Dana El-Baltaji joins us, Bloomberg Managing Editor for Credit. And Dana, it's interesting, we were saying that you could judge the bottom by credit spreads. Is that what's happening here?
Yeah, I think there's a very good argument for that. And in fact, we're also seeing it within the credit space. If you take a look at risk within Europe, it's actually down this week by the most since, I think it's June 2020. There's a massive move within risk, and people want to try to make as much money as possible because of what you just showed, which is basically this massive rout that has hit everybody across the board, not just stocks, but stocks and bonds and everything.
Dana, we've got a big Russian story hanging over markets at the moment, and that's whether they will or won't default, whether they'll be able to pay to investors the money that is due on their sovereign debt. Of course, this is the first payment that's due today since the US Treasury closed that loophole. How will the market, will sovereign ratings agencies digest this and look at this, given if they can't pay, you know, they say they've paid the money already. If they can't pay, it will be because of rules in other places, won't it? It'll be because of, rightly or wrongly, Western policy.
And that's the thing. I mean, I think that's the really complicated bit about this entire story. First of all, we've been here before. We've asked ourselves, how will Russia do this? And at this point, we don't know if the money is actually coming. If it does come, then this will come up again in a few months' time.
OK, we'll keep revisiting this story then for sure. Dana, thank you very much. Dana El-Battaji joining us there with the latest on credit markets. And for market analysis, check out MLIV Go, the function on your Bloomberg terminal for the Markets Live blog. This is Bloomberg.
Keeping you up to date with news from around the world, here's the first word. The White House is scrambling to do something about record high gasoline prices in an election year. Bloomberg's learned the Biden administration has reached out to the oil industry about restarting shuttered refineries. The average price of a gallon of regular unleaded gasoline stood at a record $4.60 Wednesday. And a record volume of Russian oil is on tankers, and unprecedented amounts are heading to India and China. Asia overtook Europe as the largest buyer of Russian oil for the first time last month. Other nations have restricted Russian oil and gas imports. Coming up, Wei Li, BlackRock Global Chief Investment Strategist. That conversation next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Another retailer gets hammered. Shares of Gap are plunging after the company slashed its forecast and missed earnings estimates. The blame is being placed on higher costs and operational missteps. Boris Johnson is urging that more sophisticated rockets be sent to Ukraine so it can strike Russian targets from much further away. We'll bring you more from our wide-ranging interview with the British Prime Minister. And the governor of Texas reportedly drops plans to speak at the National Rifle Association meeting in person after that elementary school massacre. But Greg Abbott will still deliver a taped message. Former President Trump will make his speech in person. I'm Anna Edwards in London with Matt Miller and Kriti Gupta in New York. Kailey Leinz is off today. And Kriti, we've seen positivity through the Asia session with Asia Tech, a bit of buying here in Europe, but a mixed performance here in Europe as we head towards the end of the week.
Yeah, a little bit of mixed session in futures as well, right, Matt? I mean, walk us through the price action.
Yeah, futures are actually higher right now, and they have been all morning. You know, when I came in to work like 4 hours ago, I saw Kriti in the makeup room, and I said, I can't believe they're buying, right, ahead of a 3-day weekend. Typically, investors like to get clean before they go to the Hamptons or whatever. Anyway, right now, it's up, and we're seeing investors let go of 10-year treasuries. So letting go of the perceived safety of government debt, I guess it's even more than perceived. It's pretty darn safe, right, relative to everything else. And that allows the yield to float up just a little bit to 275. NYMEX crude also floating up to 114.71. Actually, Kriti pointed out an interesting story that the Biden administration is asking refineries to up their capacity or to use more of their capacity because they want to keep gas prices down. So key over Memorial Day weekend when so many Americans are going to be driving. Maybe they're selling Bitcoin to buy gas because right now it's down. 28,989 is the level off 1.5% since midnight. And if we finish the week down, so if there's not a rally today, it'll be the 8th week in a row for Bitcoin to lose some price action. And Kriti, apparently this morning it's all about retailers getting hammered. Is Gap getting hammered?
It's getting hammered, but it's not showing up in the macro space. Futures are up, as you pointed out. And yet, if you look at what the driver was for the stock market really this week, it was a retailer story. But take a look at this retailer. Gap shares down 17% in the pre-market. Of course, this comes after pretty lackluster earnings overnight. They actually did say that not only are they concerned about supply chains, inflation, margin pressures, lower demand, really just the gambit, the wall of worry really hitting Gap all the way. But they're also looking for store closures. Gap, Banana Republic, Republic. 50 stores are going to be closed in the United States, or at least that's the plan. They're going to open, however, Old Navy and Athleta, about 40 stores. So that's good news, at least when it comes to kind of pivoting perhaps their business. We'll see, though, if they can actually pare some of these losses during the intraday session. Let's also look at this other story here. Costco also reported earnings after the bell yesterday. And once again, it's a margin story there. It's a freight cost story there for our international audience. Costco is essentially a wholesale retailer. You buy a subscription and then you're able to buy in bulk. So the prices at the cashier are actually higher, but for the unit price, it is cheaper. So a little bit of a bargain for perhaps the wealthier customer. Nevertheless, they are saying for their bottom line, the margin pressures are really eating into that. And of course, you are looking at PayPal here, and actually an upside story amid all of this wall of worry, up about 0.7%. They actually said, this is some kind of doom and gloom news, but they said they're actually cutting and reducing their workforce. And on one hand, that's bad news for the actual people of the company, but it's good news for the stock because it means they are actually going to deal with some of those cost pressures, Anna.
Yeah, Chrissy, the European stock market then dealing with that wall of worry quite confidently, at least in aggregate today. We're up by 0.6% on the stocks here in Europe. But we do have quite a divergent performance. Scandinavian shares doing pretty well this morning. London shares, UK shares doing less well. And a couple of them listed here for you. BP is down by 1.2%. It's been under pressure recently as a result of changing policy from the UK government. And we heard yesterday from the Chancellor, he's putting a windfall tax on BP. BP says this has a longer duration, this tax, than they'd anticipated. As a result, they're going to review their investment plans. It is a tax, though, just on UK profits, to bear in mind. Centrica is down by 5.4%, a UK electricity generating business. And there are questions as to whether this type of business gets lumped in with the oil and gas sector and also will face this kind of windfall tax. That is not yet clear. The Chancellor has not decided on that. But in that vacuum of uncertainty, that sector has been weakening. Here's the ruble losing ground, actually, against the US dollar. We're waiting to see whether the Russian government manages to come good on debt payments that are due today. But of course, that's going to be very difficult now because of the US Treasury closing that loophole. And this will be the first time that we've seen the Russian government trying to pay this debt whilst operating under this sanctions regime with this loophole closed, which was what they used last time to get those payments through to Western investors, Chrissy.
Yeah, and it's really interesting. I think when you look at the ruble, you actually see so much strength in the ruble. To see it unwind just a little bit in the face of perhaps some of those capital controls abating. Of course, we know there have been several stories coming out of Russia simply in terms of fertilizer prices, commodity prices, what control Russia continues to have as Europe really decreases that dependence. Let's talk about how the market is going to interpret all of those developments. Joining us now is Wei Li, BlackRock Global Chief Investment Strategist. Thank you, as always, for joining us. Let's go to the Russia question that we just talked about here. How much of that is actually still driving the market action, or do you perhaps feel that the market is pricing in or is getting used to some of the commodity pressures that have already been at play?
Hi there, good morning. Well, I think the spillover from the tragic war in Ukraine is still being felt by global economies, and by our estimate, the impact on euro area growth for 2022 is likely going to be dragged down because of the energy crisis by up to 3%. And in the meanwhile, we also expect inflation in euro area to be pushed up by up to 1.5%. That's a direct result of the energy crisis and volatility in that space. And the equivalent read across to US economy is more muted in that we expect the energy price to impact US growth by dragging it down by up to 0.5% and pushing up inflation by up to 1%. So more muted than euro area. And this was also why a few weeks ago we downgraded European exposures whilst at the time pivoted towards US. But now we are actually neutral on developed market equities. So year to date really has been a series of de-risking versus benchmark exposures.
Wei Li, good morning. So you're neutral on those developed markets. Let me ask you about the UK and how you interpret what we've learned about the UK investment climate, I suppose, given the announcement yesterday. Does it make you think twice about getting invested in UK energy assets, or does it make you concerned that other sectors of the economy that maybe are making high profits, that have substantial dividends, could be targeted next? Or do you say this is just going to be something that happens in many geographies? We've seen it in Italy, we've seen it on a much larger scale in other parts of Europe, Hungary, for example.
I think the challenge that UK is facing, this trade-off between growth and inflation, is very emblematic of the broader challenges facing many developed market economies. So during the pandemic times, monetary policy and fiscal policy, they were joined up, coming to the rescue of the economy. But now we're seeing a bit of a decoupling, right? So on the fiscal side of things, we're seeing easing from the Treasury, but on the monetary side of things, BOE is expected to now hike even more, 4 more times for the rest of the year. So a bit of a decoupling as we try to strike the balance between growth and inflation, and that makes the outlook really challenging.
Is that a real problem then, the disconnect between fiscal and monetary policy? Should they be operating in the same direction?
Well, I think with inflation at 9% and potentially even higher, given the energy prices impact, I think that's really hard to navigate. Decoupling of fiscal policy and monetary policy just makes the investment landscape a bit more difficult to navigate, which is why we're currently neutral UK equities as well, despite the fact that we actually like the cyclical nature, composition of the equity index. And on the gilt market, we think that 4 more rate hikes for this year is a bit too aggressive, but we expect term premium to come back so long and to go higher.
It seems we have a problem. With Matt's microphone.
Echoey.
Yes, we'll try and fix that. I think he was asking you something about the Fed. That was what I picked up. So I'll go.
Can you hear me? Let's talk a little bit. Let's talk a little bit about the Fed when we come back. For now, though, markets are in the green. We're going to pick this up in a little bit. For now, let's head to the commercial break. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, former Council of Economic Advisors Chairman Austin Goolsbee, 12 p.m. New York, 5 p.m. in London. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. For those of you who were watching minutes ago and are wondering what the heck just happened, apparently our director, Anthony Surik, hit the wrong button and just canceled all of our audio. So
I don't think that's what he said.
No, he denies it. Surik, you're guilty. No, let's get back to the markets right now, and specifically to Bitcoin, because 2 years ago, Guggenheim CEO Scott Minerd predicted Bitcoin could reach $400,000 apiece. But this week in Davos, he made a big shift. Now he's predicting a massive plunge even from here. Listen in.
We were probably going to hit $8,000 before. What was that number? 8,000 until we totally flush
So you
out
have
what's
no
going
more
on.
holdings?
No.
Okay,
I mean,
well,
if I were, I'd be short.
Joining us to talk about this and other interesting episodes in the crypto universe over the past few weeks is Marique Flamand. She is a former crypto skeptic. She's now the CEO of Near Foundation. And in the middle of her career, or of your career, Marique, you have helped develop some really important technologies, including USDC, the stablecoin. Let's start off with the absolute catastrophe and total failure of Terra Luna. That has got to kill confidence in a huge part of the crypto universe. Is it just a blip, in your opinion?
Well, I think it's quite isolated when you look at it, but I think it's indeed it's damageable for the entire industry. We had made tons of progress, in particular in attracting talent to come to the space. And it's true that when you see that, mainstream is going to think, well, what the hell is going on? And actually, should we trust and should we go there? Now, it is a very actually isolated thing around one specific ecosystem and one specific technology, but it's true that it's impacting.
Yeah, it's
more
just
broadly.
that, you know, especially when we saw Novogratz get a huge Luna tattoo, and this guy is like crypto guru. Like a lot of people are following the success of Galaxy, and that, you know, that loss is just so huge. Are stablecoins going to come back from this? I mean, I know that there are algorithm-backed stablecoins and asset-backed stablecoins. Do you think everybody understands the difference?
Well, I'm not sure everybody understands the difference, but one thing for sure, we can expect to see a regulation increasing, and actually we can expect to have more and more conversation around that. The reality is that stablecoins are needed, whether it's in our actual markets or whether it's actually in the crypto and decentralized markets. So I think we will continue to see stablecoins progress. We will continue to see different ways to approach how to tackle the problem. Yeah, definitely.
Marie, good to speak to you. Do you sense that Bitcoin has any kind of relative, I stress that, relative safe haven credentials when it comes to crypto? When we see these times of volatility in other coins, do you see people in the market getting back into Bitcoin as the sort of as the center of things?
Not necessarily getting back into it, but it's true that the entire market, at the end of the day, is also looking after what Bitcoin is doing. I think we're living also in a time where there is a lot of shift into what could be new technologies and different ways to do things. Look, we're in completely unprecedented times, right? You guys were talking about that before, but energy prices all-time high. We are seeing like major inflation across the globe, and not even talking about the crypto bear market that we're completely in. But there must be a way and a different way to continue on the journey of decentralization and what that technology can actually do for tackling some of those largest challenges. And that has been discussed quite a bit at Davos, and it continues to be the agenda going forward.
This is Creedy in New York. I want to really dive into the stablecoin part of this because I'm curious, how does that compare or how does that compete with, say, the emergence of a digital euro or digital yuan? I believe the digital euro coming perhaps by the beginning of 2023. How do those two compete? Why do you even need a stablecoin if you have those other offerings?
Well, that's an interesting point, right? But different governments are taking different approach. And for example, if you look at how the UK government is planning to approach that, it's not necessarily by having their own CBDC, central bank digital currency, but more leveraging actually stablecoins. So at the end of the day, it's all about definition of what's the difference. Is it a central bank that is going to control the technology, or is it, and you know, are central banks best at developing technology? Maybe not. Or is it actually private companies who are going to do the technology of what ultimately is an asset, which is fiat currency?
All right, Marique, thanks so much for joining us. Great to get your input, and I hope we can get you back on, especially on, you know, we have a dedicated crypto show every Tuesday at 1 p.m. New York time, so I hope we can get you on that. Marique Flamant there, CEO of Near Foundation. Be sure to tune in, by the way, you viewers as well. Every Tuesday at 1 p.m., Kailey and I anchor Bloomberg Crypto. We cover the people, transactions, and technology shaping the world of decentralized finance, hopefully decentralized. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kriti Gupta in New York. Boris Johnson in Great Britain urges further military support for Ukraine as it continues to battle Russian forces. Bloomberg's Kitty Donaldson sat down with the Prime Minister to discuss the mounting pressures of war.
I think it's very, very important that we do not get lulled because of the incredible heroism of the Ukrainians in pushing the Russians back from the gates of Kiev, because of their amazing valor of President Zelensky. We should not believe that this problem has gone away. On the contrary, I'm afraid that Putin, at great cost to himself and to Russian military, is continuing to chew through ground in Donbass. He's continuing to make gradual, slow, but I'm afraid palpable progress. And therefore, it is absolutely vital that we continue to support the Ukrainians militarily. And indeed, I think that what they need now is the type of rocketry, multiple launch rocket system, MLRS, that will enable them to defend themselves against this very brutal Russian artillery. And that's where the world needs to go now.
Okay, final question, and this is about President Zelensky. You've stood shoulder to shoulder with him, but there's certain calls around Europe, perhaps from France, from Germany, to maybe settle with Putin, try and.
But I would say to any such proponent of a deal with Putin, how can you deal? How can you deal with a crocodile when it's in the middle of eating your left leg? what's the negotiation? And that is what Putin is doing. And any kind of he will try to freeze the conflict. He will try and call for a ceasefire while he remains in possession of substantial parts of Ukraine.
And you say that to Emmanuel Macron?
And I make that point to all my friends and colleagues in the G7 and at NATO. And by the way, everybody gets that. Once you go through the logic, you can see that it's very, very difficult to get a negotiated solution. We desperately need it to end. The world needs it to end. Yeah. But the one way that it can end is for Putin to accept that, let us say that the denazification of Ukraine has taken place.
Oh, I see.
And that he's able to withdraw with dignity and honour. And that would be...
And
that's what needs to happen. I'm not saying that there were any Nazis in Ukraine.
No.
But I think one of the interesting things about the situation is the very strong support that Putin commands in Russia for for anything that he says or does. Yeah. I think he has the political margin of manoeuvre to make an end to this.
Boris Johnson sitting down there with Bloomberg's Kitty Donaldson, and they touched on a range of really important, serious subjects, from the war in Ukraine to the hardships that Britons are dealing with financially in terms of food and energy costs, inflation, and ways to fight that, as well as Treasury's windfall tax on businesses. Also, I think really interesting, at least for me, is that my daughter has almost the same exact haircut as Boris Johnson.
They do have an odd similarity.
I just shot the control room a picture of little Edna, and you can see that she's emulating Bojo in terms of her style. He's her style icon.
Well, they say imitation is the sincerest form of flattery, so he should take that as a compliment.
Yes, I'm sure he's well aware that a lot of people love his haircut. There's a lot more going on. There you go. Actually, he actually has a cleaner version. There's a lot more going on this weekend. There's still a lot of eco data to come out, right? What are you focused on?
There's a ton of eco data today, especially. We're talking about retailers. We're talking about the health of the consumer. We'll take a look at this. We're getting personal income and personal spending. And on top of that, we're getting sentiment data as well from the University of Michigan. But I think what a lot of people, at least in the market, are going to be keeping an eye on is that core PCE deflator. Of course, the Fed heavily watching that to kind of measure how far we are on the inflation
Right,
front.
the PCE deflator, personal spending, really important. I think consumer confidence is key also, though, because of what we've seen happen to retailers. I mean, from last week, you had Walmart and I think some of the home improvement retailers really disappointing, and yet the shares were up, then the shares were all down. This week we had, each day they're on one side or the other of the S&P if you put a move screen on your terminal. I'm watching all the racing, though, that's going to happen this weekend, Critty. An unbelievable amount of really important races, from the Indy 500, which is probably the most iconic automobile race in the world, to here you're looking at some Formula One footage. Formula One is going to be in Monaco, so that's the most important race, for F1. It'll be interesting to see what that's like without Russian oligarchs parking their yachts in the harbor. You've got, I think the Coca-Cola 600 is this weekend for NASCAR fans, and then you've got MotoGP, the pinnacle of motorcycle racing at Mugello, which is really important, especially for Ducati. It's their home race. Anea Bastianini won 3 races so far, and he's looking to make it 4.
So much to learn about cars and motorcycles. I wish you did a show on this, Matt.
We could. We could do a show.
Put that on the docket.
Yeah, I will try and put a rundown together, and we'll give it to the managers that need
Powers that be.
All right. I think that's it for early edition. We have a really exciting Bloomberg Surveillance OG coming up, because I think Tom and Lisa are in London. Are they in London?
They're shaking it up, and they're going to London.
Yeah.
They will be back in New York next week, but we're excited
on the way back
the London version
from Davos, and Anna Edwards is going to join them, so you'll hear from that trio next. Plus, Mohamed El-Arian is going to join them as well, so it's a don't miss TV. This is Bloomberg.